Hi everyone, welcome to this comprehensive video on stock markets. In this video, we'll be covering everything you need to know about stock markets, including their features, common misconceptions, and major markets and indices. So, what are stock markets? Simply put, stock markets are places where people buy and sell shares of publicly traded companies. When you buy a share of a company, you own a small piece of that company and have the right to vote at shareholder meetings. Stock markets can be classified into two main types, primary and secondary. Primary markets refer to the initial sale of stocks by a company, also known as an initial public offering, IPO. This is when a company issues new shares of stock and sells them to the public for the first time. On the other hand, secondary markets refer to the subsequent trading of stocks that have already been issued. This is where the majority of stock trading occurs, and it takes place on stock exchanges such as the New York Stock Exchange and the Nasdaq. Now, let's talk about some common misconceptions about stock markets. One myth is that you need a lot of money to start investing. While it's true that stocks can be a more risky investment compared to, say, a savings account, there are many ways to start investing with little money. For example, you can use investment apps that allow you to buy fractional shares or invest small amounts through a process called dollar-cost averaging. This is when you invest a fixed amount of money at regular intervals, regardless of the stock price. By doing this, you'll be buying more shares when the price is low and fewer shares when the price is high, which can help to average out your costs. Another myth is that stock markets are always volatile. While it's true that stock prices can fluctuate greatly in a short period of time, the stock market has historically trended upwards over the long term. In fact, the S&P 500, a stock market index that tracks the performance of 500 large publicly traded companies, has an average annual return of about 10% over the past 90 years. That being said, it's important to remember that past performance is not a guarantee of future returns, and investing in the stock market does carry risks. It's always a good idea to diversify your portfolio and consult with a financial advisor before making any investment decisions. Now, let's talk about some of the major stock markets and indices around the world. The New York Stock Exchange, NYSE, is the largest stock exchange in the world by market capitalization, and it's home to many well-known companies such as Apple, Coca-Cola, and Goldman Sachs. The Nasdaq, on the other hand, is known for being home to a lot of technology and internet-based companies, such as Amazon and Google. Other major stock markets include the London Stock Exchange, the Tokyo Stock Exchange, and the Shanghai Stock Exchange. In addition to these exchanges, there are also global stock market indices that track the performance of a particular group of stocks. Some of the most well-known indices include the S&P 500, the Dow Jones Industrial Average, and the MSCI Emerging Markets Index. So, to sum up, stock markets are places where people buy and sell shares of publicly traded companies. There are two main types of stock markets, primary and secondary, and they are typically organized around stock exchanges. It's a common misconception that you need a lot of money to start investing in the stock market, but there are many ways to start with little money. While stock markets can be volatile in the short term, they have a long-term track record of positive returns. There are many major stock markets and indices around the world, such as the NYSE, Nasdaq, London Stock Exchange, Tokyo Stock Exchange, and Shanghai Stock Exchange. It's important to diversify your portfolio and consult with a financial advisor before making any investment decisions. I hope this video has given you a comprehensive understanding of stock markets. Thank you for watching.